Hello, my dear friends. I'm truly happy to see you again in today's real-time trading session, a continuation of our live trading journey together. This Wednesday session was a memorable one for me. It took me through a roller coaster of emotions throughout the trade execution and management process. Those psychological shifts became an essential part of the story I'm sharing in this video. In this session, I used a strategy that combines Easy Trend and NovaWend as inputs for Captain Optimus Strong, the main decision-making engine in my system. The specific settings I use for both instruments are displayed on the screen. After executing 2 winning trades, with the second buy entry hitting its target almost instantly, the market began transitioning into a consolidation phase. At this point, the sideways range became clearly visible on the chart. So I marked out this consolidation zone in anticipation of a potential breakout setup. Right after that, I decided to turn off the automated trading system as the market had surged too strongly, beyond the range where the system could perform optimally. I switched to manual observation and only considered entering trades when they made true sense. At this point, 2 buy opportunities emerged right around the trailing stop zone. If either trade failed, the risk would remain minimal and within my acceptable limit. So I executed a manual buy. Once the price started moving in my favor, I quickly moved the stop to break even to secure the trade. This was one of those moments when I truly felt fear and anxiety during decision-making. Realistically, after such a strong price rally, initiating a buy position carries higher risk. However, because both entries appeared around the trailing stop, a zone with controlled risk, it helped stabilize my mindset and gave me more confidence to pull the trigger. This experience is a clear reminder that trading psychology plays a vital role in our performance. So always strive to stay mentally grounded, trust in your plan, and believe in yourself to make clear and consistent decisions. At this point, you'll notice that no losing trades have been recorded yet, thanks to a highly disciplined and tight risk management approach applied throughout each trading decision. However, as I continued to draw a new trend line to track the market structure, it became evident that the price had decisively broken through it with strong momentum. This was a clear signal that the previous bullish momentum was fading. Instead of forcing another buy entry, I chose to step aside and wait for further confirmation. Soon after, a trend reversal began to take shape, clearly confirmed by both NovaWend and Easy Trend. Based on this dual confirmation, I decided to enter a sell position to align with the new directional shift. Unfortunately, the first sell trade was stopped out as the market was still showing signs of hesitation. But I stayed patient, trusted my analysis, and waited for a cleaner setup. And then it came. A fresh sell opportunity appeared. And this time, I entered with confidence and walked away with a winning trade. This entire sequence served as a powerful reminder of a timeless lesson. No matter how precise your strategy is, and no matter how well you've planned for every scenario, if your trade management and risk control aren't solid, losses will still come, often leaving behind a heavy sense of disappointment. Trading isn't just about market analysis or timing entries. It's an emotional journey where every decision demands clarity, composure, and adaptability. And just when you feel like you've got everything under control, at this point the market had formed a significant support zone, a level where price had previously been rejected 3 times. But as price returned to test this zone for the 4th time, it became a highly critical moment. The 4th touch often carries a higher probability of a breakout. And that's exactly what happened. The support zone failed to hold, and price broke decisively below it. This was a clear signal for me to activate sell trades, positioning for the start of a potential new downward move. All sell entries during this phase turned out to be profitable. Not a single sell trade resulted in a major loss. This reinforces that the strategy was still working exactly as intended, and everything remained aligned with the initial trading plan. It also serves as a reminder that when you're patient enough to wait for the right level at the right moment and combine it with solid risk management, trading becomes a game of calculated edges, not just random chances. After a series of bearish moves, the market suddenly reversed and surged upward with an incredibly strong, bullish momentum. However, precisely because of that sharp and aggressive move, I chose not to take any buy trades. The reason is simple. There was no clear buy signal from the system, and price had already extended too far, increasing the likelihood of a buying climax. A final euphoric push before the market corrects. In situations like this, chasing price can easily lead us into rushed, emotionally driven decisions. So instead of jumping into the bullish move, I patiently waited for a sell setup, because that's often the perfect time to go against the crowd, when most traders are becoming overly confident about the uptrend. And there was one very clear and specific element that gave me the confidence to pull the trigger on the sell trade right at the breakout point. And right now, I'd love to share that with you. Before entering the sell trade on the 100 tick chart, I took time to study the price action on the 1-minute time frame, something I always do to ensure I have a well-rounded multi-time frame perspective. On the 1-minute chart, there was a key observation. Price retraced back to the 61.8% Fibonacci level, which is well known for producing strong reactions. And right on cue, price surged from that level with strong, bullish momentum. However, what caught my attention was that during the entire upward move, there was no clear pullback at all. It was a fast, one-way push. Then price revisited a previous distribution zone, an area where sellers had previously stepped in aggressively. That was the turning point. I knew this wasn't a time to chase the uptrend or look for buys anymore. Instead, I shifted my focus to watch for sell opportunities. Right at that distribution zone, Nova Wind printed a bearish reversal signal on the 1-minute chart. At the same time, on the 100 tick chart, price broke below a short-term support, giving me strong confirmation that sellers were stepping back in. Although my sell entry was slightly late, the confirmations across multiple tools gave me enough confidence to take the trade. I placed my target at the 50% retracement level of the prior bullish leg, and as planned, price dropped to that level before bouncing again. To me, this was a perfect example of how to combine multi-time frame analysis, Fibonacci, distribution zones, and system signals to build a solid, high-probability trade. What do you think of this strategy? Pretty interesting, right? And with the final trade wrapped up, I officially brought today's trading session to a close. It was a day full of volatility, moments of tension and hesitation, but also key decisions, patience, and discipline that stayed with me until the very end. Every trade, every movement on the chart taught me something new, not just about strategy, but about psychology and staying calm under pressure. Thank you for joining me throughout this real-time trading session. I hope my insights and experiences gave you something valuable to reflect on and apply in your own trading journey.